We've just seen the meltdown of the banking sector in Cyprus, and many think Malta might be next in line. Bank of Valletta's Charles Borg joins me now to discuss the challenges facing Malta's economy. Charles, welcome.
Thank you, Nick.
How has the Cypriot crisis affected Malta and Bank of Valletta?
The similarities between Malta and Cyprus reside only in terms of we're both islands in the Mediterranean, we've both under British colony for a long number of years, and both of us have 10 months of sun out of 12. But the similarities stop over there. The financial jurisdiction of Cyprus and Malta, they are totally different, built on different foundations, on fundamentals. Basically, Malta's financial sector is strong, it's robust, it's liquid, and very well capitalized. The core domestic banking in Malta is about 2.5 times GDP, as opposed to Cyprus, which is 5 times GDP. And our core banking system, the core banks, obviously are profitable. The Maltese government its debt to the GDP ratio is strong and stable, and therefore the similarities are not there. In fact, this was confirmed by a number of houses, such as Fitch, such as Bloomberg, such as the IMF very recently, confirming that the two jurisdictions are totally different.
Malta has developed into an international financial hub. As Malta's largest bank, how has Bank of Valletta contributed to safeguarding financial stability on the island?
I believe that financial stability resides on 3 core fundamentals. The first and very important fundamental is a very strong regulatory and supervisory regime, and Malta has a very strong regulatory regime, which is based on the EU legislation and the UK FSA legislation. The second, very important, is that the banks and the financial institutions need to be very well capitalized, and capitalization of the banks is among the highest in Europe. In fact, when we speak about Bank of Valletta's capitalization, the European Banking Authority, the EBA, issued its report, its last report in April, stating that Bank of Valletta is one of the highest capitalized banks in Europe. And the third and very important is the liquidity of the banks, in order to safeguard the day-to-day operation and the short-term operations. And in financial stability resides on these 3 main core areas.
Some observers have voiced concern at the banks in Malta and their perceived overexposure to the property market. What's your exposure at BOV?
Property is an asset which is very important for Malta, and this question is constantly asked to us and to our regulators. In fact, even the IMF visit that we had last week, this is an issue that they raised. Property has always been important, and it is an integral part of our loan book. However, one has to understand the meaning of property. We do invest, and we have lent a lot of clients in the property market. However, we have taken a conscious decision some years back to restrict ourselves to the top end of the property market. And this has continued to command the price, and there's still a demand for it. Our exposure to the property market has gone down significantly, and we are in the region of 8% at the moment of all our loan books. So we have reduced our exposure significantly. In the area of construction, we have a 5% exposure. We have reduced this significantly, and this is primarily aimed towards the large EU-funded projects, and basically, therefore, the risk is mitigated significantly in the area of construction and real estate.
How do you see your bank's role in shaping Malta's economy, and by extension, what's the future of Malta's economy in the Eurozone, which is still relatively unstable?
I think this is a very critical question. Bank of Valletta being half the Maltese economy, our contribution is about 45 to 50% on both sides of our balance sheet. By our very nation, by our size in Malta, we are critically important. We are important in terms of the fundraising activity, because we raise all our funding from the retail deposits, and obviously the utilization of those funds into the Maltese economy. We are being intrinsically tied to the Maltese economy. Obviously, we are interested to grow and grow the Maltese economy in a sustainable manner. We will ensure that the old economy continues to function properly. When I say the old economy, I mean tourism, for instance. I mean the manufacturing sectors. I mean the retail and wholesale sectors. and the manufacturing. But at the same time, we need to continue to identify the new areas of our economy. Like, for instance, we're doing extremely well in the IT sector, in the iGaming, in the financial services sector, and so on and so forth. And areas which we haven't tapped into significantly, like the aviation and the maritime sectors. So when we say that Bank of Valletta is a shaper of the Maltese economy, it means basically that we identify these new areas and we incentivize them to grow by helping them to identify these opportunities. At the same time, making sure that the old sectors continue to function properly.
A final question on the Eurozone's onerous banking regulation. What effect is this having on growth?
Regulation is important. We strongly believe that it is critically important so that it will put banks on a sustainable level. We are already ahead of the curve, I would say, in the sense that our capitalization is already at a level which is Basel III compliant. Our liquidity is already CRD4 compliant. So we are already, but we need to be ahead of the curve. As a systemically important bank in Malta, Bank of Valletta needs to be ahead of what is acceptable as a benchmark. Therefore, constantly we need to identify opportunities. We need to continue to grow our capital and strengthen our capital in different areas, by profit retention, by new equity issues, by hybrid instruments, and we need to find the right combination of both. At the same time, making sure that the financial system is liquid enough in order to be able to assist the Malta economy have and find the right funding for their operations.
Charles, thank you for joining us.
Nick, thank you for having me.